Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at some of the major currency pairs where I think markets are in motion. We're seeing bond yields move sharply to the downside. We're seeing stocks move lower. We're seeing the US dollar move higher against some of the major currencies and lower against others. So let's start by taking a look at the euro versus US dollar. Let's get started. Concerns about Iran and Israel are starting to weigh on the market, and looking at the euro versus US dollar, the dollar is moving higher against the euro. Euro is moving lower. There may be also this central bank disparity going on with the potential for euro ECB cutting rates before the US cuts rates, and that is helping to move the euro versus US dollar sharply to the downside and trade here today. The move to the downside is now broken below this swing area between 1.0655 and 1.0675. We are next looking toward this other consolidation area down here, which bottoms near this swing area at 1.0520 to 31. Get down to that level would be the next major target for this currency pair going forward. Risk now would be either a move above the 1.0675 level or this low right here going back to the month of February, 1.06942. So be aware of those levels, but sellers are certainly more in control in this currency pair below these levels. And if the price can stay below those levels, the bias remains more to the downside. While the dollar is going higher versus euro versus US dollar, the dollar versus yen is moving more to the downside here over the last few hours of trading. This is the hourly chart of the pair, and the market moved down to test the 50% of this last move to the upside that saw the price spike higher after the CPI data. That move to the upside was reached a even higher high today at 153.38. And as mentioned in the previous videos, that when the price moves so quickly to the upside, you just want to see a win by sellers. And wins by the sellers are showed or manifested by a move below the 38.2, a move below the 50% retracement, or a move below the 100-hour moving average. Well, we did move lower, and the market moved down to the chest, the 50% retracement level, but has so far found support buyers. And as you can see, we moved back up to the 95 level, and pretty volatile trading here in this currency pair. So be aware of this level at 152.57. If the price can get below that level, then the 100-hour moving average of the bias turns more to the downside. Otherwise, looking at the daily chart for this pair, we're above the 2022 high, we're above the 2023 high, we're above the 2024 high. That's what we did this week, and we're trading at 30-plus year highs for this currency pair. So it's hard to stop the freight train from moving to the upside. The only way you can do that is to get below certain levels like the 100-hour moving average, like the 50% retracement level. So until then, the buyers are more in control. Let's take a look at the sterling versus US dollar, and we're seeing a continuation of its move to the downside and trading here today. This that we're seeing this week. And in the process, the price is obviously moving away from our value area, which can find the pair all through this period area right through here. And we're breaking below the low prices from 2024 here, and here. Yesterday, the price came down to the low of that area. And I don't know if this was yesterday or today, but the price did also break below the low, making new lows, but then rebounded to the upside over the last few bars here on the 4-hour chart. We've seen the price move sharply more to the downside and breaking to that new low for the year, and in the process move down to this swing area through here, where we found either resistance or support before moving to the upside. We haven't been back to that level until right here, where the price now is testing these levels down to 1.24277. We're trying to find some support against this old area through here. If we can, or if we can't, then we'll look for further downside potential. By the way, this area not only goes back to these levels right here, but goes back in time, all the way, all the way back to this area right here. I had this marked, this level earmarked as a key swing area. So it's that doesn't come without some history, this area, so be aware of that. If we move below that level, it opens the door for further downside. Just for fun, I'm going to put a Fibonacci retracement of this move to the upside to see where we stand from a Fibonacci retracement of this longer term move. And we did break below the 50% retracement of that move to the upside. That level comes in at 1.25. I'm glad I put this on there, 1.24646. And as you can see, the high price, the corrective high price off of the low has found willing sellers against that level. So watch that level for close resistance now. Stay below that level. On the downside, we do have the 61.81 at 1.23635 as the next key target on the downside ahead of this swing area down here for the sterling versus US dollar. So there you have it, a look at three of the major currency pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.